The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
Well, this barely missed it. We got a little bit of breaking news that kind of, you didn't need a whole lot. You just needed a little. But as I've been saying here for a while, the risk, as options have shown it, is down to 2,700, maybe 2,680. We're down $5.60. We broke through yesterday's low. So the question is, what do we do now? I've been thinking about a way to describe this market because you don't get many of them like this. Normally, you got good volume on one way or the other and poor volume on the other side, or low volume or light volume. But what we had is for 3 days is the equivalent of two 90-year-old girls on each end of a rope pulling on it. And there really hadn't been that much. One way you go a little bit, go one way you go the other. I do have to say, though, that I said, as yesterday, I would sit on my hands and let my shorts continue to roll. The reason why is the volume on the upside, on the downside was light, but it was even much lighter on the upside. So I was waiting for some kind of sign of capitulation, and I have yet to see it. Till I see it, my belief is that there's still more to the downside. We had a little breaking news just a handful of minutes, a couple minutes before the top of the hour, and that kind of was enough to push it. In the reality of things, is this news predictable? I think it was. And so we'll see. But, there's nothing worse than politics, and nothing worse than when politics hits the law. Because, as they said in the movie, you send one of them to the hospital, we'll send 5 of yours to the morgue, and that's the way politics is. Okay, so what is going on today? Well, we're off about 5 points on the S&P cash, 2745 on the S&P cash. Dow's up 73 after being up almost 300. Nasdaq's off 25, and the weakest sector has been the Russell. I don't think it ever went positive. If it did, it just got flat on the day, and that's it. It's now off 7.5, which is about 0.5%. The rest are trailing. The S&P's, off 4, so that's not a big deal. So we'll see how this does, but we did break yesterday's low. We still have the ability, as I said in my options chart, to get down to about, about 272? I think that's what it was on the SPYs. Where's my SPY? I just have so many. Oh, there it is. We're at 274.93. We got down to 274.43, so we're up maybe 50 cents off that low so far. As I said, that means that you got about 20 or 30 points maybe to the downside. At least that's what option market makers are showing. We'll see how and whether or not this thing sticks. Again, volume light down, volume even lighter on the way up, and no real sign of any kind of bottom down here, which I think is going to come in with some kind of sign of volume. Now, we did have a nice little burst of volume on that, and we're coming up to just a little over 2 billion shares on the NYSE consolidated tape. So volume is going to pick up over the last 3 days, or at least what it was the last 3 days. So we'll keep an eye on it. But we got a little bit of action. I would not be surprised to see us kind of sell off all the way into the FOMC meeting next Wednesday, and maybe get a little bounce. We may get a little bounce tomorrow too. The way that this market's setting up, we could see lower prices maybe all tomorrow morning, maybe even into the weekend. Far too many people were long, too many calls, and kind of leaning out over the tips of their skis, but we'll see it. Did I see 90 or 19 on what? You got to give me the whole thing, because by the time I come back and look at this window, it's already 5 minutes later. Did I say 90 or 19? About what? Can't even remember. I'm thinking that we've got 30 points, something like that, on the downside for options. At least that's what option market makers. If the S&P's, the actual cash closed at 2710 or 2705, I think the option market makers would be ecstatic. The downside is that I think we've got a lot of people on the wrong side, and if they get it down there, it could really move. And maybe that's why we've had such a slow movement to the downside. They didn't want to get this thing going to the point where they were going to crack the market. They just wanted to kind of take a little bit off the top on the highs and side. So we'll see that. So anyway, you can give me a call at 877-927-6648, and we'll see what's going on. We got down to 2741 on the S&P cash, so we'll see how the rest of this goes. I still suspect we've got at least the option on quad witching tomorrow of seeing maybe even another 30 points down on the S&P cash. And again, light volume up, light volume down, so you got to be kind of quick on the trigger when it comes to a lot of these. But starting to see some cracks in the cement. In the meantime, we like to start off the show with a little bit of history.
Then it's all just a little bit of history repeating.
It is the Ides of March, so beware. For BC, Julius Caesar, the dictator for life. Who else have I heard that about? Putin, Xi, however you pronounce his name. Julius Caesar, dictator for life of the Roman Empire, is murdered by his own senators at a meeting at a hall next to Pompey's theater. The conspiracy against Caesar encompasses as many as 60 noblemen, including Caesar's own protege, Marcus Brutus, and therefore A2 Brute. On this day in 1844 BC, he said. Anyway, we'll continue on. So is there anything else really going on in the market? As we've talked about a while, of course, in the past when we were cutting off accommodation, they called it the taper tantrum. And I don't know if it's so much a tantrum as right now trying to reprice the market for what we're seeing. And, of course, we've had a few things out here with news. Monsanto is one. We'll get back to this when we come back. Give me a call today, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
S&P, it's off one now, so no big deal, other than we had a fairly lengthy, slow rally earlier in the morning that got up to 2762 or so on the cash, and now that's all rolled over. And, of course, had the little headline there with Mueller, and that kind of hit the market. Again, fairly light and variable. I just suspect that we are sitting back until we get the FOMC meeting through the way next Wednesday. Until then, you probably won't have a lot of people sticking their necks out. They're all going to be kind of turtling, going to bring in their head and their feet inside the shell and laugh at the animals as they come by trying to get them. Anyway, Dow's up 100, NASDAQ's off 21, Russell's off 10. Crude oil's up 30 cents. So we'll look for your emails here. In fact, did we get any? Okay. I got somebody from Nigeria wanting to give me a whole bunch of money. Think of that. Okay, so what else do we have? Go check this one here. Okay. Sienna. Okay. That's about it. We'll get to those all here today. Okay, anyway, Monsanto, before we left, there was some news that they would block this merger between Monsanto and Bayer. There's also some news on whether or not these guys are going to lose a lawsuit about Roundup, their single biggest chemical for crops. And that would be interesting because if they weren't able to sell Roundup, about 1 billion people next year would starve. That's probably conservative. We might have 2 billion after the wars fire up. So the question is, yes, do you want to go after their drug. That would be interesting. The downside would be the yields would be so light, unless they've got another drug sitting in the cupboard that I'm unaware of. Pesticide. But this drug may be their genetically modified crops may be the reason why we're able to feed probably about 2.5 billion people more than we were just 20 years ago. But you had a spike. You drove it through the 118.10 low. What I never could understand about this whole thing, and I think I talked about it when it started, was does it make any sense for Bayer to buy Monsanto, a company where it's illegal to have genetically modified foods and where they won't let them use Roundup anyway in Germany? What's the deal here? Why would you, in Germany, would you want to own a company outside of your country where literally everything that they do over there is illegal? And I've never understood it. No one's really made a good case for it, other than I think when they started this, Bayer wanted some kind of non-EU thing. The EU split with England had kind of started. Maybe they just wanted to be outside of all the turmoil that could be Germany and the rest of the countries as the EU slowly implodes, as it should. But, you know, you had a huge spike. You had all the volume. It's holding up a little bit better. But you know, you had a fairly good indication. You went above the previous high of 4 million shares on January 25th. On February 26th, and all you've done since then is gone sideways on lighter and inclement volume. Okay, just make sure we get everything else here. Okay. What do we have? You know, another interesting thing going on is I'm getting from one of my non-market friends, he's getting bombarded by emails saying that the end is nigh for real estate. And why I think real estate's coming back, as it should as interest rates go higher. Some of the stuff that he's forwarded me, fraud kind of comes to mind. These guys probably short the housing sector already. And as the market goes lower, they want to make sure that they're able to cover their shorts. You can always wonder, but it looked like a lot of self-serving articles, a lot of self-serving downgrades, and a lot of self-serving hysteria. Do I think housing is moving lower over most of the United States? The answer is probably yes. In low-tax states like Texas, Nevada, and Florida, they're probably going to hold up as people leave states like New York where the taxes are confiscatory. And you might want to see. Anyway, Monsanto, interesting. Some of the other stocks out here, I wanted to see how they were doing today. ExxonMobil, we're looking for the possibility of maybe some kind of low. You certainly didn't get it with lighter volume or lighter energy to the low. So the best you could hope for ExxonMobil, I think, is sideways now. This February 9th low had 30 million shares, just a hair under. You had 27 million shares yesterday back into these lows, or what was that? No, that was on the 7th as this thing went down. So could you get some bounces and some fluctuations? I think you could. But the best thing, if you wanted to go long this, would be for it to bounce and see a little bit more juice on the way up and let it come back down on lighter volume. I see absolutely no signal here that would tell me that ExxonMobil is doing anywhere close to a buy. Had some other people ask me, so I'll give you the same opinion I have on crude. That is that we have two countries, at least, and maybe several more. Probably Venezuela is the poster child. These folks, 40% of them are starving and will starve to death in the next 3 to 4 months. Meanwhile, the Cuban military juntas are down there killing anybody that would overthrow the government of these guys as the people starve. That's going to fall apart. It's just a matter of time. People, eventually you can't starve enough people. So them and probably the Cubans are going to get thrown out. So what happens instantly after that? Well, they're going to need as much cash as they can get. And once you get the miserable communists out of the way and get some capitalists in there, my guess is we're going to have a lot more crude in the second half of this year as other countries like Venezuela start pumping to get the much needed cash they need so that their people don't starve to death. And what a great explanation of socialism. Is there any better one than Venezuela? Who was it that said it? I can't remember right now. Communism starts with a gun to your head, and socialism ends with what gun pointed to your head. And another prime example, Venezuela. If anybody wants to know on why I think socialism is evil and a mental disease, no much farther than Venezuela, Cuba, or other examples where people are good, but an evil government rules. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Got an email from Terry who asked about the TLT, and did I say anything about it yesterday? I think I did, which is I was incredibly shocked that the thing has bounced very shocked that it continued to bounce yesterday. Energy really didn't come in. You got a doji out here today. I still think that there's a 90% chance we come down and test this 116 area. There just may be some other things going on right now as the market slides off the high, and maybe that's a little bit more about what's going on. Question about what options show on Apple. They're a little ambiguous right now, but somewhere between 177.50 and 175 for tomorrow. And that may be the straw that breaks the camel's back and takes us down, both in the NASDAQ and in the broader indexes like the S&P and the Dow. That may be just enough contagion to do it. You're setting up a little doji in Apple today. The biggest thing wasn't the energy at the top. It was this February 9th low up to the high 2 days ago at 183.50. It just never had any juice in it, and that's probably it. Support probably comes in at about 170 probably next week if this starts moving down. I know everybody wants to buy it. They tried to buy it 4 times. I had bought puts on this, and we got out yesterday. Sent out an update when it hit 178 yesterday. Could still go lower tomorrow, but I would rather be playing the options tomorrow on it than trying to forecast it tonight. Anyway, we got out of it yesterday, and now I've got 2 more option positions in the daily newsletter, so we'll keep an eye on it. One solidly in the money. The other one, my guess is that this thing. I think we got it. I think I'm in at like 28 cents on these puts. They're out of the money, but I think maybe tomorrow with enough push, these things will at least break even, maybe do a little bit better. So we'll see. Anyway, still looking for that lower, and actually had somebody ask a question about the options chart. Like I said, these things really haven't moved that much. It moved up a little. In what option market makers were expecting but let's show the SPY here, because this thing really hasn't. It's moved up about 15 points. Let's go ahead and take a look at that and zoom in here for you. But the option curve, where you look at how much money would be won or lost in the SPYs tomorrow, the minimum that options are going to be worth tomorrow is going to be about $900 million. We're up at what, 274. So if they could get this thing back down, let's say to 272, maybe 270, and 272, we're probably talking in the neighborhood of, what is that going to be? Can we say $200-300 million? Probably not enough to go after the market, but if you're one of the big guys on Wall Street and you probably make options on Apple, all you got to do is lay off. Don't buy a little bit that day. A handful of other people probably set up the same way you are on Wall Street. Just lay off of it for a little bit. So Apple gets down to 177.50 or a little bit below. I think you could easily see this thing at 272, 272.50 on the SPY tomorrow. So we'll keep an eye on that. Now, could it hit down there and then the thing rocket up 30 points, the actual S&P cash? I think the answer is possibly. We do have quad witching tomorrow, and it's been a long time since we've had a massive two-way market in the S&P on expiration. And by that, I mean that many of the things that expire at 9:35 tomorrow push the market in one direction. And then, of course, you've got options at the end of the day that expire at 4. So it depends on what you got going on, but it's not uncommon to see a push one direction early in the morning for futures and a push the opposite direction on options by the end of the day. But the way I see this set up, it looks more than likely we are going to have some kind of decent move around there. So I wouldn't be surprised to see, maybe selling most of the day and maybe a little rally at the end of the day, or maybe even a pop tomorrow and a sell off the rest of the day. But I suspect whatever we start with will probably be the opposite of what we end with. So, like I said, give me a call, 877-927-6648. Email me at path@tfnn.com. Anyway, we were looking at some other stocks out here, so let's take a quick look. Wide Open West, was watching some of these stocks on light volume. We are starting to see some of these break down. WOW is the symbol on this one. This one blew apart. Opened up at 8, gone down to $7 today. What else did we have? I know a lot of people around here track some of these stocks, and the market kind of rolled on this, but there was a buyout rumor earlier on FireEye. It got to 1872. Let's take a look, CYBR. Same thing. We talked about this, I think, yesterday or the day before. This is going into the big gap down of May 12th of 2017. So these things are kind of hitting up against resistance now. Another one I thought was very interesting was Oracle. Oracle's been bouncing around this $53 level. Got to 53.48 on the 13th. It's kind of rolled down, actually up a little bit today. But certainly the volume has not been close to the September 14th, 2017 high of about 22 million shares, 17 million and 16 million on that March 13th high. So, energy, again, almost all these charts look the exact same, which is off these January 29th highs down to the February 8th or 9th or 5th lows, somewhere in that neighborhood, and back up. The energy has severely been lacking off that February 9th low back up to these recent highs. And now we're kind of over on the right-hand shoulder of these, and we're starting to see some of them weaken. Okay, so we're still off 5 points in the S&P cash, up just under 100 on the Dow. Wonder what the chances are of the Dow going to flat on the day by the close. I would say pretty good. Question here, do you still have your ES shorts? Yes, I do. I don't trade them in the newsletter because you may need to cover them at 2 o'clock in the morning, and there's no guarantee that I can wake you up. So I don't trade futures in my newsletter. I may trade them individually. And as I said earlier, most of the time, maybe 2 or 3 times a year, I just loved the incredibly good signals that we'd been getting. We started talking about Friday and Monday. That was just how many of these stocks tested the highs on lighter volume. We get back, we'll see some of these other stocks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal is 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. See how things are moving along here. Well, kind of digested the news here. We're off 4 or 5 points in the S&P cash. Again, volume is picking up today. I wouldn't say it's anything that makes me think that there's anything more happening. Now, maybe we get that kind of volume in a spike tomorrow, or maybe even before the end of the day that signals some kind of low. But as far as I can tell, this market just continues to have light volume down, but just slightly, or even more than a little, slightly less volume higher. And I don't know what else there is to say about it. Apple looks like 177.50 is probably the highest it will expire. Question is just how bad this market gets. Could it get down to 175 or tomorrow? Outside possibility, I'd say 75% chance we see 177.50 in it tomorrow. Maybe a 15% or 20% chance that we hit 175. This thing loves to move on expiration to destroy the most amount of value, because a lot of times Apple will have as much money on the line as the SPYs. People like to play this into expiration, so there's a lot of money to be made on manipulating Apple, which also then manipulates the price of the SPYs and everything else, since it's such a bellwether of everything else. Got a question from Sam about Tesla. What's going on this? Actually, I'm kind of surprised that this thing is holding up as well as it has so far. Volume is not really picking up, 5.2 million shares. Again, one of the problems with being short Tesla is everybody in the world's short Tesla. Everybody knows this thing is an accounting nightmare waiting to blow up one day. The question is, how soon does it? But even on bad news, eventually all you get to do is see people that are, since it's so highly short, is anytime it comes down a few bucks, people instantly cover those shorts, because there isn't a lot of glory to be had yet in shorting Tesla. We shorted it, I think at 358. Yeah, something like that. 358, covered in the 320s. Well, I guess it's a week ago now. I just love the setup. You had a light volume test, and this is one of the first times that energies really, off that February 9th low, really came in. It just looked very weak, and not a lot of times you can short Tesla and make money on it, but that was one of the ones. You just need to make sure that when you get some cash, you run with it. This thing's probably going to get to 340 or 345 again, run some shorts out, but the volume's going to basically trickle to nothing, and then that's when we're probably going to have the big move back down to 290. But highly short stocks are very problematic to short. So let's go out and look at some of these some of these other stocks. We were talking about real estate. St. Joe is a real estate company down here in Florida. And as I said, Florida, Nevada, and Texas probably going to continue to do well. St. Joe just came and tested its August 11th high of 2017 a couple of days ago with about two-thirds the volume. Again, Wall Street loves to paint with a fairly broad brush. That's it. Okay, question. What do you make of the incentive pay deal for Musk going forward? I don't know. Hard to say. I think he's one of these guys that just keeps throwing things at the wall and expects one of them to be a big winner, and that's it. Whether it's boring holes. The only business I really like of his is SpaceX. He could be his own biggest customer, and as long as he doesn't do anything stupid like buy Solar City or the rest of it, he's got a very interesting model in space. So I think he's got probably the good business, and it's, of course, the only one that's not public. I guess the boring thing isn't public either. But the flaky tube thing, they're all fairly flaky. Let's just put it that way. He's got a lot of flaky ideas. Maybe he likes the adulation of putting out a tweet saying we're going to Mars when there's no chance that we're going to Mars. In fact, I'll talk about that tomorrow with Tom O'Brien. But some research is in that's extremely disturbing and tells us that we're probably going to have to go to the moon for a while until we figure things out. And we'll talk about the reason for that tomorrow. What else do we have? Somebody wants me to take a quick look at IBM. I haven't looked at that one for a while. Let's see how it's going. I think we saw a lot of selling as Buffett was getting out of this. My guess is we're going to find out that he's the rest of the way out of this. He's jumped into Apple, which certainly looks to be on its downside. He always said he'd never invest in a technology company because he didn't understand it. And, of course, what is he doing going after IBM and Apple? Well, predictable results. The only thing that he's made money in that he said that he wouldn't was airlines. He always said that the best way to lose $1 billion was start with $2 billion and buy an airline. You don't have a lot of movement on this. My guess is this thing, the charts on this thing all week long have shown about 160 for expiration. And these things, IBM and Apple are very good bellwethers out here for telling you what these things are looking at. Apple looks down, IBM looks like 160. So we'll see. Maybe something really horrible happens that I'm unaware of. I'm not hoping it does, but maybe that's what pushes us down a little farther. But it's just been light wind and not a lot of push. But we're going to probably close lower today. Volume is going to pick up a little. We're at 2.3 billion shares with, an hour and 12 minutes to go. If we look at the way the volume came in on the CBOE's volume summary, we had just a hair under 7 billion shares yesterday, so it did pick up a little. Right now we're at 4.3 billion shares. And, of course, we spent most of the day trying to push higher with no volume. So if we get to 7 billion shares today, I think that's going to tell you that the volume off that 2770 high was, or 2660. It's 2662, right? Was the high that we were looking at. So that would be it. He likes Coke. Okay. Okay. what else do we want to look at out here? Okay. See a few more out here. Question, someone wanted me to look at the IWM. We'll look at that IWM when we come back from this break and the last segment. Still have plenty of time to give me a call or email. path@tfnn.com, 877-927-6663.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Wanted to look at IWM here. Again, IWM went and tested its previous high. It was about 30 cents lighter on January 24th, 160.63, 31 million shares, but got into it with 25 million shares. But to me, the whole thing was this energy on the way up. And my guess is this is a little outperform the market and probably will underperform or actually accelerate back down. We're pretty close to this 155 level, which is where support is probably going to come in tomorrow. And that's probably the first level you're going to find anything. Energy's not that great so far, little 10 million shares. We'll see how that does over the next 24 hours or 6.5 trading hours, because I suspect we're going to have it. We got down to the 2750 on the S&P cash, which is what I said we were looking for on Tuesday. We've got it. Again, just not the kind of volume that really signals that we've got some kind of floor in this market. Could it take the rest of tomorrow to get back down to 2710 or 2720 on the S&P cash? Does it just gap down there? Kind of hard to say right now, but I suspect that we're probably going to have a bouncy market one way or the other. We're either going to open higher and close lower, or open lower and close higher. But I suspect that close probably is the last 30 minutes of the day is going to be a mover. But that's just the way it's shaping up now. Maybe things change between now and then. But continues to show weakness in these options through tomorrow. And generally, there's one thing about a downside to options expiration where 85% of them are bullish through going delta neutral to tomorrow. And that is that when they are down, they tend to move very quickly and hard. This 50 points down this week doesn't seem like much. I think there's a little bit more to be had. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same back channel, same bat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.